Hello everyone and welcome to my YouTube channel. This is Dr. Hafiz Muhammad Usman Rana live from Birmingham. Over the last few days, we have witnessed something that not long ago seemed highly unlikely. A peace framework emerging between the United States and Iran after months of tensions, military confrontations and fears of a wider regional conflict. Unsurprisingly, much of the discussion has focused on politics: who won, who conceded, which side gained the upper hand. But I think those are the wrong questions. I'm interested in something else entirely. I'm interested in why financial markets around the world reacted so positively. Within hours of the announcement, oil prices fell, stock markets rallied, and investors' confidence improved. And that tells us something important. The real story is not peace, the real story is certainty. In fact, I would argue that certainty has become one of the most valuable commodities in the global economy. Think about the world we have lived through over the past 5 years. We have experienced a global pandemic, unprecedented supply chain disruptions, the war in the Ukraine, an inflation crisis, trade tensions between the United States and China, disruptions to global shipping routes, and now fears of broader conflicts in the Middle East. So different events, different regions, and different causes. Yet they all produce the same economic consequences: uncertainty. And uncertainty is expensive. It discourages investment, delays businesses' decisions, weakens consumer confidence, and ultimately slows economic growth. Businesses do not necessarily stop investing because conditions are bad. They stop investing because they cannot see the road ahead. Governments become cautious, investors move toward safer assets like gold, and consumers postpone major spending decisions. So, in many ways, uncertainty has become a hidden tax on the global economy. This is why I believe markets were not celebrating peace this week. They were celebrating the possibility that one major source of uncertainty had been removed. Let me make what may sound like a controversial point. Investors do not fear bad news as much as people think. Markets can adapt to higher taxes, higher interest rate, strict regulations, or even slower growth. What markets struggle with is unpredictability. They struggle when they cannot assess risk, they cannot forecast outcomes, they cannot understand what tomorrow might look like. So, financial markets can operate in difficult environments. What they cannot operate in comfortably is an environment when nobody knows the rules of the game. And that is why certainty matters, and that is why this agreement matters. Now, does this mean the world is suddenly entering an age of peace and prosperity? Probably not. But it does raise a fascinating question. What if the most important economic story of the next decade is not artificial intelligence, not inflation, and not interest rates? What if the biggest story is a gradual return to stability? For much of the last decade, the global economy has been moving towards fragmentation. Countries have become more protectionist. Supply chain have been redesigned. Governments have prioritized economic scrutiny over economic efficiency. So the language of globalization has gradually been replaced by the language of resilience. So we hear terms such as friendshoring, nearshoring, or strategic autonomy. So these concepts emerged because businesses and governments lost confidence in the stability of the global system. But if uncertainty becomes decline, the consequences could profound. Investments could return, cross-border trade could expand, businesses could become more ambitious, and large-scale projects could move forward once again. And confidence, perhaps the most important ingredient of economic growth, and it could begin to recover. So this is why I think many commentators are missing the bigger picture. They are focusing on oil prices. They are focusing on, of course, oil prices matter. They are focusing on stock market, and of course, stock markets matter as well. But these are symptoms rather than underlying story. So the deeper question is whether the world is beginning to move away from an era declined by disruption towards era characterized by greater predictability? This is the question investors are asking because confidence cannot exist without degree of certainty. No business invests without confidence. No entrepreneur takes risk without confidence. No investor commits capital without confidence. Confidence is the fuel that powers of economic activity, and confidence is built on stability. Now let's bring this closer to home. Whether you live in London, Birmingham, Karachi, Lahore, Dubai, Mumbai, or New York, your economic future is influenced by events taking place thousands of miles away. And that is the reality of the modern global economy. A conflict in one region can affect inflation in another. A shipping route in the Middle East can influence business costs in Europe. A diplomatic breakthrough can shape investment decisions across continents. The world is interconnected in ways that many people still underestimate. For emerging economies such as Pakistan, this matters enormously. When global uncertainty rises, capital become more selective, financing become more expensive, and growth becomes harder to achieve. Conversely, if you see when confidence improves, opportunities expand. This does not mean Pakistan's challenges disappear overnight. The country still needs higher investment, stronger exports, better productivity, and meaningful structural reform. As I often say, stability is not the same thing as prosperity. A country can become more stable without becoming more competitive. However, a more stable global environment provides countries like Pakistan, Sri Lanka with a better opportunity to succeed. So before I finish, let me leave you with one final thoughts. Perhaps we have been looking at peace in the wrong way. Most people see peace as a political achievement. Markets see peace as an economic asset. Because peace reduces uncertainty, uncertainty influences investment, and investment ultimately drives growth and prosperity. And the economic value of peace is often invisible until it disappears. That's why Wall Street loves peace, not because investors are idealistics, not because markets are emotional, but because certainty creates opportunity and opportunity remains foundation of economic progress. So the question now is whether this peace framework represents a temporary pause in the global uncertainty or the beginning of more stable economic era. So if it is the later, the biggest beneficiary may not be the United States or Iran, it may be the global economy itself. Thank you for watching. Let me know your thoughts in the comment. Are we entering a more stable world, or is the simply brief moment of calm before the next storm? Until next time, stay informed, stay curious, and I will see you the next episode of DHMUR English. Thank you.